Hello, everyone. If you have student loans or a child or a relative heading to college, changes are in the works effective for July 1st that will determine literally thousands of dollars in student loan payments for your student and your family. I'm John Cox, and I'm really following up and offering this as some information to a conversation I had with a student and the student's parent regarding student loans. And today we're specifically talking about what SAVE borrowers, and SAVE, you'll recall, is Saving on a Valuable Education Plan that was offered through the Department of Education. So this is what SAVE borrowers, parents, and fall 2026 families need to do right now. New federal loan rates are going to tick up slightly for 2026-27. It's about a 0.13 percentage point increase across all loan types. It's not dramatic, but it does add up over time. One bright spot is if you enroll in auto pay and you have eligible direct loans, you get a temporary 1% rate reduction. So it's worth looking into on that front. The SAVE plan is going through transitions. A court-approved settlement ended the SAVE plan effectively, and that's what's generating the changes that we have here today. If you're one of the 7.5 million people affected, you have about 90 days after your service provider sends you notice to choose a new repayment plan. But don't wait for the notice. Act now, start preparing. Your deadline is complete and your selection needs to be wrapped up by September 30th. The three moves that you really need to concentrate on now is, first off, log in to studentaid.gov and refresh yourself, know what your loan type is. Federal loans have options, private loans do not. The second move is to run the free loan simulator. It probably take about 5 or 10 minutes. Compare the repayment assistant plan to the income-based repayment plan to the standard and the tiered standard plans. It's important to note that the pay-as-you-earn and the income contingent repayment plans may still matter for some existing borrowers, but they're being phased out. So don't assume that they're a future long-term answer. Then the third move that you have to consider is, particularly for fall 2026 families, is to file your FAFSA now. And separately, enroll in the auto pay by September 30th to lock in a temporary 1% rate reduction through June 2028 if you're eligible. The aid gap is really a heartbreaking phenomenon with how we fund higher education. Basically, for household incomes under $60,000, it's ultimately a stronger aid eligibility. And it depends on the family size and the assets. When you get up to the $200,000 and above range, you're often expected to contribute more, but merit aid and formulas still do matter. And if you're in the middle, if you're in that $75,000 to $150,000 range, up to about $200,000, you feel the squeeze. You know, there's too much income for the largest need-based grants at many colleges, but not enough to comfortably pay full cost. But be mindful, there are moves that still work. There's still merit aid available at many institutions. There's the CSS profile schools that have other financial mechanisms that may be available. And there's also the in-state strategy on choosing a public institution that's closer to home. I also encourage people to speak with college financial aid staff. They're there to help, and they want to help. Ask for reconsideration of financial assistance and advocate for yourself. It helps in getting to a yes. So just to recap on what we've presented here, the new federal student loan rates for 26-27 are going up slightly. The SAVE borrowers are being moved out of what is effectively becoming a defunct plan and should watch for their servicers sending them notices beginning July 1st. They will have at least 90 days after that notice to choose a new plan. Separately, borrowers should consider auto pay by September 30th of 2026. Very important. This gets you a 1% temporary reduction on the interest rate, and that helps. Families borrowing for fall of 2026 should file the FAFSA. Compare the loan options that you have, understand the new rates, and avoid assuming the sticker price is the real price that you're going to pay for your college education. So, thank you for listening. If you're interested, please click on the subscribe button or feel free to drop me an email for follow-up. I appreciate your interest, and I know what you're going through with student loans and how to finance a college education, and we're here to help. So good luck.